I think investors will still be concerned with three major issues. The first I would put as the Eurozone, the second the US outlook, and the third China and commodity prices, and I'll explain why those come together. On the Eurozone, for the time being, the crisis has been allayed and calmed down, but essentially the markets are benefiting from an announcement effect. The underlying problems have not been solved, and the risk there is that with the economies in recession, the debt ratios are actually worsening rather than improving. So it's perfectly possible that investors could lose patience, or indeed voters could lose patience with the situation, and we would see another outbreak of crisis. On the US, we've obviously got a short-term problem with the budgetary issues. There is still the expenditures side of the question to be solved. There is the budget itself to be passed before March 27th, and there is also the debt ceiling. All of those could cause some anxieties and disruptions in the markets. But more generally, the US is on a recovery track, but its recovery, I think, will continue to be slow, and there may be disappointments along the way. So although I'm expecting about 2% growth in the US, I think it's going to be a volatile year. And then thirdly, with China, the economy is finally showing some recovery, but it's not going to be the kind of surging recovery that we had in the early 2000s, or of the kind we had in 2009, 2010. So that in turn means that instead of an upsurge in commodities, which was very important, gave a big lift to Canada, it's much more likely that China will grow at a subdued pace, something like 7 or 8% rather than the previous 10 or 12%. And while that might support commodities, or at least give a base to them, I doubt if we will see a strong upward move in commodities from here. Well, the two main positives I would identify are, first of all, that the global economy is growing. It's true that the Eurozone is in recession and Britain is barely out of recession, but North America will continue to have positive growth, albeit slower than normal, so subpar growth. And Asia is growing, the Middle East and Africa are growing, and Latin America is growing. So I think we're going to have a year of positive growth, but it won't be very strong growth overall. The second positive, and this is really important particularly for bond investment, is that I see inflation remaining subdued in most countries, which in turn means that interest rates will not need to be raised abruptly by central banks around the world. So that means that bond markets will continue to be fairly attractive. I don't envisage a drastic sell-off in bond markets, in fixed income. In other words, we're not really at the end of the bond bubble. Bond prices will remain firm and bond yields will remain pretty low in this generally low yield environment.